Good morning and welcome, Patriot Radio News Hour. Joe and Jason on this Monday, and already, you kind of like the Broncos and the Cardinals. We're just having a few technical difficulties. The start off the week here, it's been crazy. I know football season is it's on in full force. We're going to have Joey with us in just a minute. But as I'm getting text. Jack, listen, we're scrambling a little bit. It's Monday. I'll say this. We screwed up. We did. My wife and I and the kids. We have that family thread, where all four of us can text each other, and it wasn't me. I'll just say this, but somebody texted, man, the Cardinals look so good. It's like 20-0 at halftime, and then, that was it. The fix was in, the jinx was in, so let's hope for better things. I know the Broncos, I think the same thing happened to the Broncos. I think they were up big. They blew it. The Cardinals
21-3,
blew it.
Joe.
21-3,
and here, I haven't watched a lot of football, but I always kind of look at results and stuff as I'm, swimming around and looking at stuff. But the Broncos opened to 2 home games and 2 close losses, so they pretty much a lot of fans are already giving up the whole season now because that's 2 home losses to start the season.
That's it. Throw it. Listen, we had it with this. Cardinal fan, we had given up before the season had started, right? We're hoping for. The number one, and we have the Texans pick, so, maybe we'll get the first and the second, but, there you go. 800.
We have the prime time. We have the prime time 3-0 starting CU, though. So,
boy, let me
looked a little unfair, though, how they got this last one. Looked a little shady how they got the last win. CSU fans are very unhappy.
I'm going to say this right now. How exciting for the state of Colorado, because what a ball game that was. That was must-see TV. I was on super late, even for the West Coast. On the East, what a great game. CU in Colorado State, that was tremendous. Man, I thought, I'll be honest, I think Deion's a great story, all of those things, because he has that hoodlum motif, aura, if you will, but he's not. Right, the guy doesn't party, doesn't swear, he doesn't do any of that stuff. He's a great motivator of young men. I thought it was brilliant by Colorado to get him because that's all anybody's talking about. But I was rooting for the upset. I was pulling for Colorado State.
Check out this little stat. From what I understand, I could be wrong. This is what I was told, so this could just be a rumor mill, but. He pushed the game from 6 p.m. local to 8 p.m. From what I understand, Deion Sanders wanted the game later, so it started later. And then I guess CU ticket prices went from $150 a ticket last year. They're charging $550 a ticket this year. And they're selling out, so I guess they got to pay his wages, I guess.
Right. You got to pay for all that stuff. So, but yeah. A lot of exciting stuff happening out there. 800-951-0592. It is Monday. We've had some holidays, and then Joey was doing some other stuff. So we haven't had Joey on in a little while. So it's good to have him back. Listen, this is going to be an important show because, like everything, things are changing. If you have a young adult, 18 to, say 25 years old, you are going to want to pay attention because there's been a big change in healthcare insurance. And we see it all the time, right? We've talked about, how expensive car insurance has got, how expensive homeowners insurance and all the insurance companies jacking up the prices. Well, no different than in healthcare. They're actually looking at, it's just getting harder to get. We've got the legalization of drugs. We've got vaping and these things that are new that the insurance agencies are like, I don't care, legal or not legal, you're not getting insurance. And there's a ways for these to avoid having that happen as they get older, and it's harder because, let's face it, kids grow up a little later now, don't they? Right? They live with mom and dad. A lot of them aren't getting married until their 30s. And then by the time they're looking to get insurance, they really don't understand what's happening, and people are being declined left and right. And Joey wants to fill everybody in. Joey, welcome. Good to have you back.
Yeah, it's great to be back and be back on the radio show. I've been busy, which is always a good thing on my end. But I heard you guys talking about football. I love football. I think watching Colorado University and Deion Sanders is super exciting for the sport, and it's cool to see. And as always, the Cardinals were tanking for the first pick. Hopefully we can get that. Who knows? But I know today we want to talk about insurance and the importance of getting these things done earlier at an early age. Just from what I've seen is, hey, we grow up and now people, they're smoking weed or they're vaping or smoking cigarettes. You know, I personally pay for my own little brother's life insurance because I know at the end of the day, if he's 19, 18 years old, it's one, it's never going to be cheaper, and two, he's never going to have to take a medical exam ever because that need has been solved for before it happens, and whatever he does in his personal life, they're not going to be able to tap him for it. We'll dive in a little further into that. I can hear these commercials coming on now.
Stay with us. This is an important message, especially for you guys out there with young adults. We'll be back. Eight 800-951-0592. Joe and Jason, Patriot Radio News Hour. We've got my son Joey with us, and we're talking about, you know, the changes that are going on in the insurance industry, and Joey's talking about the latest when it comes to life insurance, especially what's happening to the what I'll call it the 25 to 40-year-olds that are trying to get health insurance. And Joey, they're having a big problem.
Yeah, there is big problems, and whether it's medical history or just personal habits in our own lives, smoking, weed, all these things that are now legalized, it doesn't matter in terms of the outlook of insurance companies, and it's harder and harder for people to get coverage as you get older in life. Maybe you've got married, you've had kids, you stop going to the gym every day, and things come up from a family health perspective that happens generationally. Right? It gets harder and harder for people to apply and get approved coverage at a rate that seems reasonable to them. And the way we do this, or the way you can prevent this from happening, is getting it done earlier. And a lot of people have grandkids, or you have kids, and in life insurance, there's great ways to utilize that, where one, it becomes an asset for them, but two, right, they're covered from a life insurance perspective, and they won't have to worry about medical exams or things like that. And I think the biggest appreciation is grandparents have the ability to gift their kids a product that'll give them $500,000 or $1 million by the time they're 60 years old. Right? And there's great strategic ways to do it, but the most important thing is that we're locking in coverage for people, but we're doing it so they don't have to go under a medical exam, and we can bypass things or just do it at a way favorable rate and locking in your health. You know, I have 25-year-olds who aren't getting approved sometimes because of their medical history or because of their personal habits in their lifestyle. And then I have clients who have grandkids, and they're gifting them life insurance policies. And something that's going to be a safe asset for them that grows tax-free, right, that they can access and utilize whenever they want. Maybe it's their first down payment on a home, or maybe they graduated school and after 15 years of funding it, they're buying a first car. But I really urge people to take a look at this stuff. If you have young kids and they're just starting to get serious or haven't thought about it, those are people that we should be reaching out to and talking to and having a conversation and solve for problems and be proactive before they happen. And I know in life we're all reactive. When a problem occurs, we solve it. But with financial planning, we want to make sure we're proactive in our plan and we're solving for problems before they even happen or come up. That way we're always prepared. And when life throws us a curveball, because it will, it's just a matter of when, that we've got someone there to catch it and make sure that everyone's financial plan is going to be safe.
Okay, so here's what I want to just spell it out for everybody. Let's, Joey's trying to be a little more politically correct. Here's the problem. The employers don't seem to care, right? They've stopped testing for marijuana and things like that in these kids, and I call them kids, right? They're in their 20s and going into their 30s. And they're now all of a sudden, hey, I just had a baby, I got married, I bought a house, I need life insurance, and they're being denied, and they're all caught off guard. But they're like, well, but my work doesn't care. My work doesn't care that I smoke marijuana or that I vape or whatever it may be. And so what Joey, what you're saying is hey, if you do it early, right? Hey, they're younger. They're 18, 19, 20, 21, 22, 20. You can avoid all that because the insurance company is like, oh, they're young. We're not even going to require a medical exam. And a lot of times you can get these things done for less than a combo meal a month from McDonald's.
Yeah, that's exactly what we're saying here is let's lock in that health. And let's lock in that coverage. And yes, everyone should utilize benefits to their employer. But what we know is people switch employers all the time, constantly, if not once every 2 years. That's just the way our workforce operates now. Well, all your benefits when you switch employers goes away. That little insurance product that covered your salary goes away. Let's get something private that's always going to follow you, that's always going to be there, and it's always going to pay you out. The one problem I have with the benefits to an employer is, let's say you've got a disease or an illness, and maybe you've got 2 years left to live. Your employer can take you off their plan, and that coverage you had is bye-bye. We need to make sure that we lock our health in at a younger age through a private company so that when things happen or all of our coverage through our employer, it doesn't matter. We've got something through a private company that's always going to be there no matter what my situation is. And when we're 18, 19, 20, 21, 22, it's easier to get approved for things and avoid a medical exam, whereas if you're in your 30s, they're going to look at everything. They're going to have you take a medical exam, and they're going to look at your doctor reports, and they're going to find out, are we smokers? Are we X, Y, and Z? And they're going to look for a reason to decline us or get us a higher premium. We want to make sure that we're being advantageous and we're getting this done so that's never a problem for our younger kids or our younger adults growing up.
It's something where as we're listening to Joey talk about this stuff, we all know that it's like, all of us with kids, we've got a real good idea of what they're doing. And we may not think, I'll use marijuana as probably the primary example. A lot of people nowadays don't view that as a bad thing. That's just, it's fine. It's just, it's marijuana. It's kind of become acceptable. But what Joey's telling you is it may be acceptable to you. It may be acceptable to the employer that your kids are working for. Unfortunately, when it comes to insurance, that's an automatic decline, right, Joey? They're going to get declined.
They will either get declined or you're paying 4 times more than what you should. And we need to avoid that. There's no reason that we should have to be paying, a ton of money for some life insurance to protect ourselves. And at the end of the day, your car insurance probably costs you $200 a month, maybe even more. I mean, we're talking $15 to insure yourself, to insure your family, to insure your kids, and to make sure that if something happens, our loved ones are taken care of. And for all my clients and people I talk to, there's a similar theme, which is we care about our loved ones. And we're willing to pay that cost to make sure everyone's taken care of if I were to pass away prematurely. And some people don't get that option to do it because they waited too long, and they don't get to go to bed every night knowing that my family is going to be protected if something happens to me. And I don't want that to be a problem. For KHNC listeners, for all my clients that talk with me, we want to make sure that we have the ability and the opportunity to cover the ones we love. And the only way to do that is to make sure we get things done earlier and at a younger age when we're most healthy in life. Because I've seen the horror stories. I've seen people, maybe they had cancer or XYZ, they're smokers, they smoke weed. They get denied that opportunity to make sure their loved ones are going to be okay if something happened to them. And that's a problem and a discussion that I hate having with people, but it's one I have daily. Let's make
this
sure
has
that
become pretty common, right, Joey? The way you're saying it, this has become really, really common. And it's terrible to talk about it, right? It's something where, you're talking about, hey, a bad thing, getting life insurance, a bad thing happening, but it can be used as an investment tool because a lot of people don't think about, well, why would I want to get life insurance on an 18-year-old, a 19-year-old, a 23-year-old that's maybe still living in my basement playing video games? And the realities it's kind of twofold. You can do it from an investment standpoint, and plus the fact you're locking in at a rate that's super, super affordable, and you don't have to worry about, hey, 5 years from now, 10 years from now, they're going to get denied, or it's going to be so expensive that they really can't afford it. And that's really what's happened. I mean, you're seeing the stories now about people dropping their car insurance because they can't afford it. They can't afford to get insurance if they're in California or Florida or Texas on their house because it's too expensive. There's ways around it. And one of the things that Joey's talking about today is, hey, it's a way that it can be advantageous for anybody, grandparents, parents, whoever can buy policies on their younger relatives and have it work as an investment as well.
Yeah, exactly. There's no need for life insurance to just be a benefit, and if you don't use it, it goes away. There are ways you structure it to supplement your overall financial plan and add it to your portfolio and make sure that, hey, the investment market's great. That's where wealth is built. Let's add something that's going to grow regardless of what the market's doing. Last year, market's down 25%. People took a big hit in their investments. But our clients with us, their insurance policy grew by 5%. Let's take some risk off the table. Let's, one, solve for the problem of the death benefit, protecting our loved ones, but two, create diversity in our financial plan, not only from an investment perspective, but a tax perspective. The only other vehicle out there besides the Roth IRA that's going to give you tax-free growth. And for all of our conservative listeners, they love it because there's a general mistrust in financial markets, depending on what your relationship is there with that. Well, let's get some money off the roller coaster and let's insure ourselves at the same time. It's a win-win. Every dollar we put into these things, it's going to come back to us, whether in our own lifetime or when we pass away to our loved ones. It's a phenomenal tool that we're seeing people slowly not have access to do to their health and age and what you do in your personal life, whether it's smoking or things like that. So I urge people, if you haven't learned about this, if this hasn't been on your mind, if you have grandkids, if you have kids that are growing up, let's make sure we have this conversation and get something in place before, quite honestly, it's too late.
Joey, give out your number because we're coming up on the break.
Yep, reach me at my personal cell, which is 602-909-9048. Again, that is 602-909-9048. It's always a pleasure to come on the radio and chat with people and work with listeners from KHNC and help spread the word and just make sure we're putting people in a better spot financially. We're locking in our health, and we're not leaving any risk on the table, and we're planning to create generational wealth for our loved ones. But as always, happy Monday to everybody, and I hope everyone has a great week.
There you have it. I'm a proud dad right now. That's my boy Joey. There's just some more great financial advice, stuff that you would never even think of most times, and using this as a tool to protect you and your loved ones. We'll be right back. $800-951-0592. Joe and Jason, Patriot Radio News Hour. It's just, I'm not shocked when you think about insurance companies, right? They're car insurance, the biggest increase in 50 years. Medical insurance, get ready. But if you haven't gotten your new premiums yet, wait till you get them. And Joey's got a way for you not only to take care of some loved ones, skip medical exams, and have it be an investment, especially in down markets. Insurance does really, really well. Who knew? 602-909-9048 as we look here at the markets. It's a big week. A lot of central banks, our central bank. We got the meeting on Wednesday, the Bank of Japan, the Bank of England, the European Bank. Everybody's going to be talking about rates. Are they raising, not raising? Right now, the Dow's up 20. The S&P's up 5. The NASDAQ is up 21. The 10-year note, 433. Boy, I don't want to say this one. I'm getting tired of doing it. Crude oil, 92.50. It just seems like it just doesn't stop when it comes to crude oil. Gold's up 3, 19.31. Silver is flat here, just above $23 to the ounce. And don't forget, obviously gold and silver, gotta have it. Things like, what Joey does, whether it's your IRAs, your 401ks, your life insurance, and all of that stuff. Then we got why refi. You talk about great returns, up to 10.25%. It's fixed. What does that mean, fixed? It's fixed. It's the same every month. Doesn't matter. It's not correlated to Wall Street, right? Wall Street, is it going to go down 20% again next year? A lot of people think so. I don't know. Why refi doesn't care. Is Jay Powell going to raise rates on Wednesday? Even with inflation running, a lot of people think he won't. Why refi doesn't care. It never changes. It's always going to be the same. You don't have to be afraid to look at it. They don't play games. They don't charge fees. If you need your money back, you get your entire principal back, period. I mean, and of course, you don't have to invest in things you don't want to invest in. Check them out, investyrefy.com. That's the word invest, the letter Y, REFY.com. Or call them at 888-Y-REFI-24. Of course, as you guys know, you got to have at least $50,000. That is the minimum, but 888-Y-REFI-24. And Jason, we just talked about crude oil. Man, it just seems like it just won't stop here as inventory levels globally are not good. We're really in a tough spot. The Strategic Oil Reserve, they kind of blew their wad on that last year and into this year. and now we're seeing the highest, here in Arizona, a lot of stations now have gone to $5 a gallon, $4.99. It's $5 a gallon, and it looks like we're going to see even higher prices again. And then the Fed's going to meet on Wednesday, and so far anyway, everybody thinks that they're going to leave rates where they are for at least another 6 weeks.
Yeah, I saw a bunch of banks are all they're all getting excited because they say it's done. I've seen many banks.
They're hoping
and they're talking about this. Yeah, well, one bank even said in May of next year there'll be a rate reduction. I mean, they're really pushing the whole. The rates are done. Rates are done. Rates are done. Obviously, trying to exert whatever influence they have. I don't know what the storyline exactly is, Joe. But to me, if the inflation continues to persist and go up, which I believe the end of this year you'll start to see inflation get worse, they'll have to raise the rates again. They'll have to do it again. I don't know what these guys are thinking. I mean, I guess they could just print a bunch of money and lower the rates again. I guess they could try that again, Joe. But I think this time the inflation problem forbids them from doing it wholesale. So they should be lucky if it holds. Rate reductions. I don't think that's till 2025 if the Wall Street free money guys' hopes ever are put back into motion. It's going to be a while, Joe, in my mind.
Yeah, I don't. It is. It's very, very interesting, and I think you're right. They're trying to convince the Fed not to do it because it's hurting. The bottom line is the economy's not bad enough. And it's kind of weird, right, to say it, right? But the idea that the central bank could somehow fight inflation and not hurt the economy, it doesn't work that way. I wish it did. Wouldn't it be great? Because that would say, listen to you got to understand how idiotic that is. Hey, they printed all of this money, but they can avoid any pain if they just raise rates slow enough and only a little bit, then somehow miraculously, hey, all that money printed didn't hurt. It's not how it works, guys. You know that. I know that. They know that. And what these banks are saying is, man, you need to stop because they get it. Hey, we don't know. Do we have one more rate hike left or two? And maybe they can even survive a third. But I guess here's what they know. This thing's getting ready to break because, Jason, as we know, it doesn't go suddenly. It's going to go very quickly, and the problem is they just don't know, hey, what next hike is going to be the one that breaks the back. But you're not going to get rid of inflation if you don't break the back.
Could be that all the rate hikes we've already broke the back. How about that? It just takes a little time.
That is an argument that's being made, right? That is one of the arguments that's being made is, hey, you've already broken it. Yeah, you just don't know you broke it yet, right?
I saw stuff that Charles Schwab is stuck in 1.7% products, and they're one of the safer big banks from what I understand, and they're stuck in 1.7%. And everybody's leaving. Nobody in their bank can make any money there. They're not going to sit around and Charles Schwab can't give them anything because they're stuck at 1.7%, which they loaded up on. Can you imagine if Charles Schwab was the next one to go, Joe? Like Silicon Valley. From what I understand, the situation between the two banks is very similar.
Yeah. So Schwab is definitely, they are not the strongest when it comes to it. And like Jason said, they're just stuck in these products. And quite honestly, they were one of the ones that thought, hey, never in their wildest dreams did they think rates would get as high as they did without breaking things. And they were wrong. And now they're paying the price for it. We'll be back. By the way, a silver special at Spot. Yeah, you heard it right. That's coming up next. 1-800-951-0592. Joe and Jason, Patriot Radio News Hour here on this Monday as we're getting ready for the Fed announcement that is coming on Wednesday about rate hikes. And, you know, we've got banks in trouble again. The FDIC, they didn't shut that bank this weekend. It's just a matter of time. Jason was talking about Schwab and all these problems here. Have they broken it already and they just don't know it? Is the next one going to break it? The one after that? How's it all going to work out? But, Jason, we have an opportunity today. This is something, again, and we've had a few. We don't deal in this a lot, but when deals come, they come. We have an opportunity on 4 full bags, and this is how you have to buy these, in the full bag, of the 40% Kennedy half dollar. So remember, it was 90%, which is the junk silver we normally sell, the utility silver, 1964 and older was 90%. Then they took the silver out of the dimes, out of the quarters, the half dollars for like 4 years. They put 40% silver, so 65 to like, what was it, 68, Jason, something like that?
To 60, yeah, 65 to 69. Actually, there was 40% silver in the 70s, but the 70s there wasn't a lot of them made, and they were mostly in mint sets. So 60, these will probably, almost all of them will be 1965 to 1969. I haven't looked at every bag. You could have all of 1 year in one bag, but the one bag I did open, there was 65 to 69 in the bag.
So these are, so you're going to get 2,000 Kennedy half dollar 40% coins, which it's just under 300 ounces, like 296 ounces of silver, but it's all about the price. The bags, we've got 4 of them. They're $6,800, which would equate to about $22.97 an ounce. Right now, silver, the September silver contract, silver just went positive as we're talking about here, $23.15. So you're getting it below the spot September price here. You do have to buy the bag. It's $6,800 for just under 300 ounces of silver. U.S. government hallmarked silver, by the way, and being able to buy it for less than spot, Jason, that's a great opportunity.
Yeah, and we'll be honest, this is not a popular form of silver. So when it's not popular, it's about the price. When silver is not running very hot, we have to buy this stuff well below spot because the guys that they own, the distributors, which is where this stuff goes if it doesn't sell, they're going to give us maybe spot or below spot to us. So we always price this stuff as to how it's priced for us. So, if you buy this stuff, if you ever have to come back and sell it to us, we might get you spot. If silver's running hot, we might give you below spot when you sell it back to us. But it's within the right range. It's exactly what we do with all the other stuff we sell. So this is cheap, and it's always better to buy less popular silver like this in large amounts. Because I have guys that come in, they sell me the roll of 40% silver. I can't do very much with that. It takes me forever to sell it. So we have to price it really low because, I buy it and I sit on it and then silver goes down. We just lose money. So when you buy 40% silver, and these are cool coins, by the way, real cool coins, it's priced right. You're not going to lose anything if you ever have to bring it back to us, which is why this customer brought it to us, because we pay the best. So buy a bag of 40% silver, $6,800, but you're below spot, which is great, right. And you have a whole 2,000 coin count of silver half dollars, Joe.
And these are in Fort Lupton as we speak. We got the 4 bags. They are live. 800-951-0592. These are full bags. This is 2,000 silver $0.50, 40% Kennedy silver $0.50, just below spot, so just below melt at $6,800 at 800-951-0592. And this is just one of those, once we sell the 4 bags, there are no more. This is just not something you'll normally see, and you're never going to see it priced at this price at retail. But this is why we do what we do here. It's a great opportunity. 800-951-0592. And these are going to be a little nicer than your typical, junk bags of the pre-64s. Those get pretty worn and real black. These are going to be in decent shape, Jason.
Yeah, these are some of these have been circulated. Some of these look uncirculated. There's a good mix, but the graying color that silver gets because it's been in human hands, it does have that. But there's it's not like the old silver where it could be worn down. The Mercury dimes, the Walking Liberty $0.50, those are always show a lot of wear. These don't have that. And I remember the last time I bought a lot of 40% was during the COVID time, maybe 2021. And we were buying this stuff at spot back then and selling it for a little over spot. So that shows you that when silver starts running here in the future, then you're going to get the spot price going up, so your silver goes up, and you're going to get the premiums will come up because once silver runs, Joe, I've seen it. People walk into my office and buy every single thing I got on my desk. Just everything disappears.
Oh yeah. Listen, it wasn't that long ago. Premiums on $0.50 were as much as Silver Eagle premiums. This is a great opportunity for the right people out there. 40% silver bags, $6,800. 800-951-0592. Jason and I will be right back wrapping it up. Eight 800-951-0592. Joe and Jason, Patriot Radio News Hour, wrapping up this Monday. Gold's up over $4 here, 1933. Silver, depending on where you want, go to Kitco, right? Up 8 cents, 23.11. September silver contract in New York is now $23.17. We've got $0.50 bags. So this is 2,000 $0.50. These are Kennedy $0.50. The 40%. So 1965, 66, 67, 68, maybe 69 in these bags up to 1970. Below spot. This is 296 ounces of government hallmarked silver at below spot at $6,800. So $6,800, you're getting 296 ounces of silver. That's $22.97. So you're pick that. I don't care what it was. Around that spot's a great deal, right? I mean, any silver at spot, a 5-ounce silver bar at spot would be a great deal. You're getting U.S. government hallmark silver at below spot. That's an amazing deal at $6,800. Jason, 800-951-0592. And like we said, these bags are live up in Colorado.
I'm looking at on eBay half bag going for just under $5,000 for a half bag, Joe. That's eBay is not the best place to do shopping. It's a legitimate place to go, but this is actually a good price. It's $4,850 for a half bag, 1,000 coins. So you double that up, that's $9,700, Joe, for a full bag. So you're $3,000 better than getting it cheap on eBay. And you can find some cheap deals on eBay. There's a lot of risk to shopping there, which is why it's cheaper. But even where the risk is, Joe, these coins are $3,000 more per bag than what we're selling today.
Yeah, this is something where we wouldn't be out here pushing it. We know what a fantastic opportunity this is. If you have the means, these are the deals you want to jump at. And I know we've been doing some different things lately, but that's just what's coming. You know, whatever comes in, that's what we work with. And this is just a great opportunity to pick up government hallmark silver at a really, really good price. And that's saying something. And, of course, U.S. government hallmark, which is always, you know, we live in the U.S., it's always the highest premiums, right? You know, think about it, silver eagles, gold eagles, they always have higher premiums than maple leafs or Krugerrands. But we don't have an item. We have no item that is actually less than this because, like I said, not only is it not above spot, it's not $1 above spot, $2 above spot, it's actually below the spot price right now at $6,800, having 2,000 barterable silver coins. That's a pretty good deal. 800-951-0592. Jason and I, listen, we got the half-empty cup coming up next. You don't want to miss that. And then, of course, we'll be on the Fed watch for at least the next 48 hours after today. We'll be back with more.